Hi everyone, I'm Maria Nager with Mahar & Associates, Tampa Team TLC, and we're talking all about real estate in the Tampa Bay area. So last week I touched base a little bit about credit scores and credit reporting and all about that. This week we're going to talk a little bit about the different types of lenders and pre-approval versus pre-qualification. So as you may or may not know, there are different people to go through for your sources of lending. So you have big banks like Regions, Chase, SunTrust, Bank of America, those kind of companies. And then you have credit unions, which some are affiliated with. There are then brokers who take your loan application and send it out to several different banks. And then you have direct lenders. And they're basically a bank in themselves, but they're not those big commercial banks, and they do the loans directly. So you're thinking about buying a home. One of the first things you're going to need is a pre-qualification letter or a pre-approval. And the difference is pre-qualification is you call up the lender and say, hey, I make $50,000 a year. I have a car payment, a credit card payment, some utility bills. And so that's my debt. And they kind of figure out, you tell them how much you have in the bank, and they kind of figure out how much you would qualify for. So they will give you a letter saying you qualify for a mortgage of $100,000, going FHA, putting 3.5% down. You also may want to look at going with a pre-approval if you're really ready to buy. That is a little more in depth, and it's a stronger source of proof when you go to purchase a home. So the difference is they're going to run credit on both pre-approval and pre-qualification to see what your score is, first of all, like we talked about last week. And then with the pre-approval, they're going to verify your income, your assets, your employment, and if you're self-employed, you're going to need a minimum of at least 2 years tax returns. And they're not necessarily going to look at what you grossed, because you might write off a bunch of items and then you may only make a smaller amount. So keep that in mind when doing your tax returns. So those are some of the things, the differences between pre-qualification and pre-approval. Now, when you go to make an offer, definitely going to need one of those two items to make the offer. Otherwise, a seller is going to say, well, how do I know that this person is really qualified to buy my property? So that you don't want to waste their time, you don't want to waste your time. Plus, it also helps you know what really is your price range that you are qualified to buy in, because you may be thinking, well, I probably can only buy up to $250, and maybe you could buy up to $300. And it also helps you know what the payment would be based on principal and interest, not including the taxes and insurance, because those are going to vary depending on the property that you're looking at. Later on, we'll get into taxes and CDDs and HOAs, but that's something to keep in your mind when you're looking at properties, is how much are the taxes and HOA and CDDs. So anyway, when you are going and looking at those properties, you want to keep that in mind. And another thing to talk about real quick is rates. Right now, rates are like almost historically at their lowest. They're still like in the mid to high threes, depending on your credit score and depending on which way you're going. But if you purchased a home last year and paid in the fives, you may want to think about refinancing, because you could possibly save a couple $100s a month. So that's all I've got for today. Again, this is all about Tampa Bay real estate. I hope that maybe gives you a little bit more information. If you have any questions, you can always personally message me, or you can call me, 813-618-7915. I hope you all have a wonderful weekend. Be safe. Be careful with the heat. Try to stay hydrated. And see you next week. Take care. Have a great day. Bye.